Hi, so we are the globetrotters. I'm Caitlin, and we also have Manjam, Manuj, and Ricardo, and we're going to be talking about why free speech is not necessary for open markets or for growth. Alright, so just a quick run through. We'll start off with a clarification of what the argument actually is. And then Manjam will talk about theoretical reasons why freedom of speech is not necessary. I'll go into a regression analysis, so tables with examples. And then Ricardo and Manuj will go into more specific examples and country comparisons. So just to help us understand what the argument is, I want to establish that there's not a statistically significant relationship between open markets and growth. So you can see here how disparate all the different relationships are. So the point is that the argument today we're actually having is two different arguments. One is that freedom of speech is not needed for growth, and the other is that freedom of speech is not needed for open markets, but you can't lump the two together. So for freedom of speech, we used a definition from a UN resolution from 1976. It's pretty standard. It's a right to freedom of expression. It's still relatively vague. For open markets, there are two different contexts that can be used in. The most common is low trade barriers and high cross-border flows, but it could also be used in terms of low internal barriers for competition.
I will give you some theoretical reasons about why free speech may not be good for open markets and economic growth, and also give you some examples of how free speech can even hurt the economy. First, markets require perfect information to be perfectly competitive. Nowadays, we have so many channels to express ourselves and share information, like Twitter, Facebook, and forums. You can easily get onto those websites and say whatever you want. The low cost and huge network ensure amazing speed of spreading the information, as well as a high chance of spreading distorted information, which can damage the economy. Here are some examples. In 2012, a rumor of grapes can cause a cancer appeared on the internet in China, and it caused a 50 million economic loss. The same thing happened on melon as well. The farmers worked hard for a whole year, expecting fair revenues for their harvests, but now they have to let the fruits and crops rot in their fields, and all reduce the price to a ridiculous low level, just due to some irresponsible rumors. In addition, distorted information can also produce negative effect on stock price. Here's a typical example. On September 8, 2008, a rumor spread about United Airlines that caused the company's stock price to drop down to a low of $3 from the prior day's close of $12.3. Actually, the rumor was an erroneous report in terms of timing, claiming the company had filed for bankruptcy. We can see from the figure how the stock price went down dramatically because of the wrong information. So based on all those tragedies and loss caused by distorted information, we believe that the regulation of speech is extremely needed. And we also have some good examples of regulated information, like FDA and SEC. They both have restrictions about how to spread information in market and provide healthy growth of the market and economy. Next. Kitty will give you some regression analysis over relationship.
Okay, so we also ran a regression comparing freedom of press and growth. The Freedom of Press Index is the best overall measure that we have of free speech, and it was created by Reporters Without Borders, which is an international nonprofit organization. There is a statistically significant correlation between the two, but if you look at R-squared, which is the overall measure of the success of a regression in predicting your dependent variable, which in this case is GDP growth rate, from your independent variable, which in this case is the Press Freedom Index. So it represents the strength or magnitude of the relationship, and here the R-squared is 0.04, which is very low. So press freedom experienced very little of GDP growth, and so that makes it difficult to conclude that it's absolutely necessary to have this in order to increase your GDP. So I've pulled out some examples to further illustrate this. So here we have a bunch of countries with very high growth rates and a low freedom of press ranking. So in particular, Macau, Turkmenistan, and China are strong examples of this. They're right at the bottom of the freedom of press ranking, all three below 170, but they all have really impressive growth rates. Here is another table, but this time we're looking at the relationship between open markets and free press. So the Open Market Index ranking comes from the International Chamber of Commerce, and they define open markets by a country's trade relations with other countries. The Ease of Doing Business ranking comes from the International Finance Corporation. So here you can see some more countries that do not follow the expected pattern. They have a very low freedom of press ranking, but business-friendly and open markets.
I'm going to give some examples on economic development without cultural sensitivity, but with high growth economies. Russia is an example. I am going to discuss World Wide Web, which ignores cultural sensitivity, that is through the global information network. Russia is an example of this because when free speech was opened in Russia, there